Hi everyone, in this video I'm going to answer the question, is Mastercard stock a buy? I'm going to use my simplified 6-step framework for analysis, so let's get right into it. The first step in my framework looks at the customer value, and one of the things I look at for to observe customer value is revenue growth, and Mastercard's revenue has soared from 7.4 billion in 2012 all the way up to 18.9 billion in 2021. And they offer, an extremely convenient form of payment for consumers and merchants. It's just really easy to use a Mastercard to make a payment. A Another thing I like to look at for customer value is the net promoter score. This is a measurement of customer loyalty, and Mastercard has a net promoter score of 7. If we look at the scale here, it would be considered good, and it's almost in the range of getting ranking as needs improvement. So, uh, the score is in danger of getting into needing improvement there. The next step in my framework looks at unit economics, and for MasterCard, its initial investments in developing, scaling, and onboarding merchants around the world are paying off handsomely right now. It's earned an operating profit margin on averaged 54% in the last decade. That's incredible. Many businesses would dream of having a 54% gross profit margin. MasterCard has a 54% operating profit margin, which is incredibly good. Excellent unit economics for MasterCard. The next step in my framework looks at the total addressable market, and the transaction value on credit cards in the US alone was 4.3 trillion in 2021. The figure surpasses tens of trillions worldwide, so a massive market opportunity for MasterCard. The next step in my framework looks at competition, and it operates in a sort of oligopoly alongside Visa. They're the two major providers of these kinds of services worldwide. There are smaller players, but it's mainly them two. And they don't compete against each other based on price. Instead, they try to lock in exclusive agreements with merchants. Sometimes they don't lock in an exclusive agreement. They're happy to be one of the options available at that merchant, and they're happy to take their 2 to 4% fees plus a small 20, 30, 40 cent fee on each transaction, and that brings in billions of dollars of revenue for the companies at very high profit margins. So they're all very content in the way these operate. They're not trying to battle each other, lowering prices, making it more favorable for merchants, and this is good news for Mastercard stock investors. The next step in my framework looks at valuation, and I use the price to free cash flow and price to earnings ratio here. And if you look at price to free cash flow, just about near 34, going back all the way before 2018, it's about fairly priced. I would say average valuation going back all that time. It's been higher, it's been lower. I would say closer to the lower side in terms of cash flow. And the same with price to earnings, right about in the middle of the range where it's been. I would say a little bit lower. It got a little bit ahead of its skis there in 2021, trading at price to earnings and price to free cash flow over 60. But for the most part, it's been in a range between 30 and 45, a little bit higher maybe. But right here in the mid 30s, I would say is fairly valued. It's not cheap, it's not expensive, it's fairly valued here. The final step in my framework looks at risks, and disruption from fintech could unsettle existing market dominance of MasterCard and Visa. I mentioned they are the two large players here in this trillion-dollar payment processing industry, and fintech players are dying to get in there, take a piece of that pie, and one of them could get through and take a meaningful share from MasterCard and Visa. So that's a risk here. Even though the probabilities may not be extremely high, it's a risk that one of these players could get in and disrupt this oligopoly that they're operating here. And then near-term headwinds from a recession. Of course, if people spend less money, MasterCard earns a fee from each transaction. So if the transaction value is dropping, then MasterCard's fees will also drop, and that's a risk for MasterCard in the near term. Finally, now that I've looked at each step in the framework, let me give Mastercard a grade here. And for customer value, I gave Mastercard an A minus. Convenient payment processing, showing evidence of healthy customer growth in the billions and increase in revenue. Unit economics, I talked a little bit at length there of how incredible their margins are. A plus for unit economics. Same with total addressable market, A plus. It's a $1 trillion industry. Competition, I gave it an A, one of the best competitive environments from an investor's perspective. The way MasterCard and Visa are kind of, staying away from each other relatively, not trying to encroach on each other's market share. And then risks, again, I give it an A because nothing really massive near term in terms of something that could disrupt their revenue and profit significantly. Even in the event of a recession, their revenue and profitability would not be impacted as much as some other cyclical companies might be. That's because even in a recession, we're operating in a highly inflationary environment. So nominal spending might increase even if real GDP growth decreases, right? Adjusted for inflation, MasterCard may still do well even in the event of a recession. So I give it an A in risk. Valuation, I gave them a B because the stock is not cheap and it's also not expensive. So they get a B in that regard. Okay, on the next slide, I'm going to answer the question if MasterCard stock is a buy. But here I would recommend that you subscribe to my channel because I'm going to be updating this recommendation regularly. You're going to want to stay tuned to those updates and not think the stock is a buy forever, right? There's going to be updates. You're going to want to stay tuned to those updates. So go ahead and subscribe while I flip to the next slide to answer the question, is MasterCard stock a buy? MasterCard stock is a buy right now. Excellent profit margins, massive market opportunity, healthy revenue growth, decent valuations sways me to recommend MasterCard stock as a buy for my viewers right now. Okay, so that's all I've got for this video. Thank you for watching, and if you subscribed, I'll see you next time.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill set and risk levels. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.